So we're done with 12.95. We have done the entire planning process, or as I say, the risk identification process. We now need to go and do something with these risks. What are we actually going to do about these risks in the audit? We've identified the risks. That's great. We've documented all sorts of information about the client. But it's not good enough. We've got to do something with the risks, and for that we'll go into our fraud and our business RAC. Let's open up my fraud RAC. Now what I would just want to show you is in the large. I'll flick over to the medium in a moment. If we have a look at our fraud risk register in my large client, you will recall that with a large client we're dealing with lots and lots of assertions. So have a look here at the assertion section. There are a lot of assertions that you can go and link every single risk to, and it'll be explained more fully when I look at the medium-sized client. So look, there are all the assertions for a large, but I'm going to rather go and look at the medium. It's a whole lot easier. Here are the assertions when I'm looking at my medium-sized client. So that's why I say medium is sometimes a far better way to go because we're not dealing with quite as many assertions. You only want all of the assertions listed, all 14, when you're dealing with a particularly high-risk client that you need to go and do additional work on, or really need to go and understand the distinction between the assertions from an account balance or class of transaction or disclosure point of view. Okay, so here we are in my fraud RAC 15.05, and what the document automatically does is it pulls through all of the risks that I've recognized. Now I just went to 12.60 and selected a whole lot of them here so that we could have a look at them together and we could go through the assessment process. But this is the crux of what's happening here. We have our revenue recognition risk. In this file we didn't have quite as many estimates, or I marked all the estimates as not a fraud risk, otherwise your estimates would also be listed under 12.70, the ISA 240 considerations. We've got one risk that we documented in here from 11.20, and then we have a number of risks that I raised just in 12.60 for discussion purposes. What we now need to go and do is, I'm going to skip the revenue recognition. That pre-populates quite a bit of itself for you. We'll just have a look at the other questions in the other risks that we've identified. And the first question that we have here is, can the risk be related to specific components or assertions? So we've gone and we've documented this risk. Let's say, for instance, it's something like going concern. We're unsure that the entity will be a going concern. Can this be linked to specific components or assertions? And the answer, sometimes yes, sometimes no. Sometimes, because of a going concern issue, management will try and overstate revenue, for instance, so that it looks like they're still okay. They will try and understate liabilities, or they'll try and overstate your PPE. If you don't have a scaly director at the company that you're auditing, then maybe a going concern risk is actually just a pervasive audit risk. And we'd say that no, we cannot relate it to specific components and assertions. Now if I say no to this first one, you will see that action 2, which is identifying the class of transactions, account balances and disclosures, and the assertions, is actually highlighted in black. We don't need to do that because we've just said it cannot be linked. But if we go to the next item and we say yes, this can be linked to specific components and assertions, what do I need to do? Well, here's my risk. Which components does it actually impact? Let's go and tick a few. You simply go and type a yes. Okay, and as I type a yes, you'll see that the assertions are highlighting in yellow as well. We now also need to go and identify which assertions are impacted by this risk. Now let's go and pick one specifically here, cutoff. I'm going to say yes to cutoff, and you will see that the other cells are remaining yellow. Let me go and delete cutoff. Let me go and select completeness. When I say completeness, the other cells go green. Now, the reason that this is happening is that RAC and Draftworx knows that what type of assertion these are. Completeness is an account balance and a class of transaction assertion. So if I select completeness, I have selected an appropriate assertion for both property, plant, and equipment and revenue. I can go and select more, so it doesn't mean that I can't select more assertions. It's just telling me that I have not missed something. Whereas if I go and select cutoff, cutoff is only a class of transaction assertion. So I have not yet selected an appropriate account balance assertion. So I need to go and select another one. Let's go and select rights and obligations. I've selected rights and obligations. Everything is fine. Okay, now let me go and delete property, plant, and equipment. You'll see that now rights and obligations becomes red. The reason is that I've selected an account balance. Rights and obligations only relates to account balances, but I don't have an account balance component. So we have an error creeping up, and that's why the red is popping up. So look out for the colors in these cells. We do try and guide you as much as possible to make sure that you are making appropriate responses when you are dealing with your risk assessment process here in our fraud and business RAC. So I'm going to select a few, move on to the next questions on these first two lines. Now, the next one is, because we've said we cannot link this risk to specific components and assertions, I need to go and decide what response will I then give. Where I have, for instance, let's go back to our going concern risk, and we've said that it is linked to revenue, so we believe that management will try and overstate revenue because of their going concern risk. What do? I go and I perform a specific procedure in my revenue section to address the existence of revenue. Because they're going to try and overstate, I test existence, and we go and make sure that all revenue that's recorded has existed, and we'll probably do it with a significant level of assurance. So in other words, we'll select a very large sample size. Where we've said, you know what, there's a going concern risk, but no, we can't link it to specific components and assertions. What can I do? What test can I actually go and perform? And here the ISAs actually give us some guidance, and it gives you a list of possible things to look out for. Do I emphasize to the audit team the need to maintain professional skepticism? Do I assign more experienced staff or those with special skills or use experts? Do I provide more supervision? Do I incorporate additional elements of unpredictability in the selection of further audit procedures to be performed? Do I make general changes to the nature, time, or extent of the audit procedures? Or do I do none of the above? Now hopefully you don't go and select none, but these are the responses. So it's literally go and select from a drop-down. Let's go and say we're going to provide more supervision. Then I need to go and describe how I'm actually going to implement it. So how do I provide more supervision? Partner will visit daily. Managers will actually spend the entire day at the client, whatever the case might be. So this is a practical implementation of what we're doing here. Okay, so we make a selection and we give a practical outworking. This is how we're actually going to go and do it. We don't need to do this response where we have assigned specific components and assertions because we're going to go and do more procedures. So there's not a problem there. And then we need to go and document management's response to this risk. Now at this point, maybe once again, you're not with management, so you can't actually go and have this discussion with them. But we need to go and consider management's response in assessing these risks. If we find risks and management are dismissive of us or they don't agree with us, we need to document that fact because that can affect our approach and how we're going to go about doing something about that risk. So once again, we go and document what management's response is. Okay. Now, For the first item where we said we can't link to specific components and assertions, we're actually done. The risk is blanked out. We just need to go and provide more supervision as we said we would. However, for the items that do have an impact on specific components and assertions, the next question is asking us to go and document an existing control that addresses the risk. Now, there are a number of ways to go about this. If you have documented your system descriptions very well, maybe you just want to hyperlink to that system description, or you can go and document this in detail. You can choose, but you do need to go and document something in there. You also need to go and verify the implementation of that control with a walkthrough, and a walkthrough is literally taking one item through the system that you have just described and going and documenting details. But please put in details. What's the date? Who did you speak to? What was the transaction number? Put in as much detail as you can about that walkthrough, and you can go and document the process that you followed. All right. Then we go and have a look at a question about whether or not we actually believe at this point, do we still have a fraud risk? So we've documented a risk. We've gone and said, okay, this is going to impact revenue and PPE. Okay, it's a very unusual risk that's going to impact revenue and PPE, but nonetheless, this is going to impact revenue and PPE. But then we went and we found, you know what, there's actually a control here. And we did a walkthrough and we thought, you know what, this control is actually very good. As a result of this, do we still believe that there is a fraud risk? Yes or no? That's what this question is all about. Yes, there is still a fraud risk, or no, there is not a fraud risk anymore. Okay? I'm not going to complete all the others, but just so that you can see what the difference is for the rest of the questions. If I say no, there is no longer a fraud risk, you can actually stop there. You don't need to do anything further. These two cells we need to adjust to highlight in black as well. If we say there is still a fraud risk, the next question is actually go and document the procedure that you're going to perform. So we now go and document an audit procedure in detail. Okay? We also have the opportunity to document an alternative procedure. Now, you would need to go and document an alternative procedure where you feel that, yes, there is a control, but there is still a fraud risk, but I want to test controls and substantive procedures. Then go and document an alternative. The other situation where you would need an alternative procedure is where, for instance, your assertions are completeness and existence. You can't test completeness and existence with the same sample. It's just not going to happen. Okay, so you can go and document an alternative procedure to address the other assertion. Okay, the last question is go and document which cycle in the audit program you will actually go and test these procedures. So where is it going to lie? Now, the reason for this question is, for instance, here we have revenue and PPE. Those are different cycles. I don't want to go and do the test twice. I want to do the test only once. So I'm going to go and say I want to do this procedure under the trade and other receivables. What this will do is it still populates the procedure on both audit programs, but on PPE, and we'll have a look at it in a couple of weeks' time, on the PPE, it says, here's the procedure. It is performed under trade and other receivables, and you just hyperlink it to trade and other receivables. Just so that if IRBA picks up that you have a fraud risk over property, plant, and equipment, opens up your property, plant, and equipment audit program and says to you, but there is no fraud procedure, you don't have to first go and scratch in your head and find out where that procedure is. It's telling you on the audit program, this is still the procedure, but it's giving guidance to your clerk that although this procedure is here, it's actually performed in another cycle, so you just need to get that hyperlink in place. You don't need to actually go and physically perform the procedure. The other thing that we have done to this document is that the information that you have documented in here will roll forward. I know it's not highlighted in blue, and we need to consider changing that, but all the information about the control, about the procedures, about the walkthroughs, everything will roll forward to the next financial year. So it is worth documenting this information in detail. Whether it's a hyperlink or whatever the case might be, please do go and document this information. The other thing that we have put in place as well is a control to go and prevent trigger-happy clerks from deleting things they shouldn't. So let's go and say that they decide that the poor control of tangible assets is actually not a risk. And they go to 12.60 and they go and look for this risk. Let's go and find it quickly. Poor control of tangible assets, and they decide, you know what, I'm just going to delete it because I'm actually too lazy to go and do the procedure. They go to this working paper, they delete the poor control of tangible assets, and they flick back to their fraud rack expecting to have accomplished their tasks. And initially you will see that that risk has actually disappeared. However, if I scroll further down, there's a section here called prior year and deleted risks, and you know what? There it is. The risk is still in place. There is still a poor control of tangible assets. Anything that you had documented, obviously we hadn't in this case, would still be found within each cell. And this is how we're also rolling information forward. So if you roll forward and you open up your fraud risk and you've forgotten to actually implement that risk elsewhere in your audit file, it would actually just come and lie here under prior year and deleted risks. So that you can either go and say, well, you know what, this is still a risk, leave it right where it is, that's fine, it still carries through to your audit programs, or I can go back to the source document and include it in my planning somewhere just to neaten up my planning section a little bit. Either way, this is still part of the audit file unless you go and you need to have, once again, logged in as a manager or partner to go and say, yes, I want to delete this risk. And in fact, I don't think I'm logged in yet, so I can't type that in at the moment. So I'm not going to worry about it. I'm going to leave it right where it is. You would need to be logged in, say yes, delete the risk, move out of the working paper, and when you come back in, it will be gone. Okay, so that is the process around trying to protect your file from, like I say, trigger-happy clocks. 16.05 is our business risk register, or our business RAC, and the business RAC, very, very similar to our fraud RAC. I just want to quickly identify what the difference is that you will encounter. Firstly, you still need to identify whether or not it relates to specific, components or assertions. It then has an additional question here asking you, is this maybe a compulsory significant risk in terms of ISO 315 or ISO 240? It is just a memory jogger. Very often you're probably going to say no, because ISO 240 we've actually dealt with very well already, unless you suddenly pick up a risk that's actually related to maybe impairment or something like that, and you can say, well, this is an estimate, therefore I do feel I need to raise this as a significant risk. And then you would say yes, that just limits your options as we go. I'm going to say no in all three of these cases. Then it asks me, what is the likelihood that this risk will result in a misstatement? And we have 1, 2, 3, 4, low, medium, high, or almost certain. The example I use is, let's say we are auditing a retail store. And our risk is that there is stock theft. So what is the risk in a retail outlet that stock is going to be lost? And the answer there, I believe, is almost certain. Oops, sorry, shouldn't use the shift. It's almost certain that, well, in fact, certain that you're going to have stock theft in a retail store. Then we would say 4. Let's go for another item and we say the likelihood that there's going to be a misstatement as a result. And it's not asking how big the misstatement is, it's just asking, is there a misstatement? Okay. Let's go and put a 2 there. Now, once again, for the item that cannot be related to specific components and assertions, we can't do anything about it. Okay. But for the other 2 items, we can go and document revenue, properly plant equipment, inventory, cost of sales, whatever the case is. Go and document the components. When we get to the assertions, the colors work in exactly the same way. However, we don't answer with a yes or no here. We once again, we now go and put in a 1, 2, 3, 4. Sorry, it's very small, so I'll read it to you. A 1 is low, a 2 is low to moderate, 3 is a moderate, 4 is significant, and this is asking the potential magnitude of the error that will occur as a result of the misstatement that is caused by this risk. So let's go and say 4 we would say is material or more. 3 I would say 75% of materiality. A 2 is 50% of materiality. A 1 is 25% of materiality. Okay. Now let's go and look again at our stock theft example. What's the likelihood that there will be a misstatement as a result of stock theft? It's almost certain. What is the value going to be? And here you need to go and consider, surely they've already done a stock take. And they've actually identified a lot of their stock shrinkage. So is it going to cause a misstatement in the financial statements? The potential magnitude is probably low. So I would go say valuation accuracy, probably low. But again, each client is going to be different. Maybe you want to say, well, there's going to be a material error as a result of stock shrinkage because they don't do their stock take correctly. So we're looking for a 1, 2, 3, 4, which is an estimate of what magnitude impact this will have on the financial statements. Okay, it is a judgment call. You need to exercise judgment in this case. You need to make use of professional judgment here. There's not really a right or wrong answer on the one hand, but it must be justifiable, what you document here. All right, once again, action 3 is only for the item that's not related to specific components and assertions. There you have an overall response. Then and the same, you need to give management's response. Now, with the fraud risks, we said that you must document a procedure. With the business risks, we're giving you the option to document a procedure. And as soon as I say, yes, I want to perform a specific procedure, what this will do is it actually then doesn't carry this risk through to your audit plan at all. You go and document your procedure, and once again, you go and document where you want to perform that, which cycle, and it'll go and put it on the audit program for you. This item, it's going to carry through to my audit plan, and I will decide on specific procedures. Now, what I want to point out with RAC Micro, if you have business risks that carry through into your business RAC, one of the requirements of RAC Micro is that you do go and document the procedure on your business RAC. This is the procedure that I'm going to do so that actually our audit plan only is left with low risks. We don't need to do the audit plan in detail because everything is going to be substantive test of detail, and I will address that in a little bit more detail next week when we have a look at it. So for RAC Micro, you've got to go and document your procedures here, and this will then pull through to the audit programs. The deleted risks work in exactly the same way on your business RAC. Anything that is deleted is carried down to the bottom. Now, just as a little bit of a sneak peek at what is coming next year, we've had a lot of comments from you guys, from our users, that is saying that the layout of this working paper is a little difficult. And up to now, we haven't had the technology to really do anything about it. Now, this is still a development document, so please forgive me if there are some errors. But this is what we are doing with this business and fraud RAC going forward. We have gone and redesigned it to make it portrait rather than a landscape document. And you'll see that the risks are pulling through. In fact, we have documented information and it's already appearing from our previous version. So the two versions of this file are completely interchangeable. So there are the components that we selected. Here are the assertions that we selected. We've gone and documented information, documented the walkthrough. All of this information is already in place, okay? The whole idea is that, for instance, let me just show you, if I want to go and add an additional component, so let's go and use this drop down. I want to go and add depreciation. As soon as I add depreciation, it adds another row for me so that I can go and document the next one. And as soon as I document an additional assertion, it goes and adds another row, so that I can, as I go, just add with a drop-down list rather than having the vertical layout of all the assertions and components listed. We're now working on a horizontal plan because we can now automatically open and close rows as we go. So let's just go and have a look at 12.60, for instance. Here we need to go and document management's response. Can the risk be related to specific components and assertions? If I say no, it doesn't give me the option to select components and assertions. It's just asking me for my overall response and my description. If I say yes, we can assign specific components and assertions, then it immediately goes and closes those and opens the first component and first assertion for me to go and document, and so on and so forth. So that's the layout of the file that we will be working with. What we do unfortunately lose is the hyperlink. It becomes a little bit impossible. Unfortunately, spreadsheets don't allow a decent formula for what I need to put into that spot, so it just gives a reference. It's not a hyperlink anymore, but it does still carry forward the deleted items as well. So remember that prior poor control of tangible assets we deleted earlier, it still sits here. It hasn't been taken away, and it would still require management interaction to delete. So we've actually just gone and changed the layout of the file completely.